AI, or artificial intelligence, was the talk of the town in 2023, and I expect that trend to continue here in 2024. Every single company that's out there right now is trying to connect themselves in some shape or form to artificial intelligence. The great thing for us investors is there's numerous ways to play this AI craze. You can invest in the chip makers, think of stocks like Nvidia or AMD. You can invest in chip maker suppliers, or the folks that have the software. Think of companies like Microsoft. You can also take a different direction and invest in companies that create equipment for semiconductor companies to create artificial intelligent chips. Or even you can take a real estate approach, companies that provide data centers. And in today's video, we're going to take a look at 3 AI dividend stocks that could explode here in 2024. The fact of the matter is, AI isn't going away anytime soon. In fact, it's only getting larger. The global AI market is valued at nearly $200 billion, with the US AI market alone expected to reach $300 billion by the year 2026. The global AI market is expected to reach $1.8 trillion by 2030. By the year 2025, nearly 100 million people will be employed in the AI space, as 83% of companies claim AI is a top priority in their business plans this year, with 48% of businesses already using some form of AI. So as you can see there, AI is certainly not going away. And down in the comments section below, let me know, what is your favorite AI play moving forward? It could be a dividend stock, AI related, or it could be a non-dividend stock that's AI related. Let me know down in the comments section. And if you could also hit that like button down there, subscribe to the channel so you're notified anytime we drop new content, and let's jump into it. Hey everyone, Mark Rusin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we begin, let me thank today's video sponsor, which is The Motley Fool. The Motley Fool has a ton of great resources and products available for investors of all different levels. And right now, if you go to fool.com/Mark, you could sign up to receive their 10 best stocks to buy right now. All right, without further ado, let's take a look at 3 AI dividend stocks set to explode here in 2024. Beginning with AI dividend stock number 1, which is Nvidia. Stock ticker NVDA. I can already hear you guys screaming at the computer right now saying, Mark, Nvidia is not a dividend stock. Well, they do pay a dividend. It is cheating a bit. It's barely a dividend. Why they even pay one, I don't even know. But Nvidia nonetheless does pay a dividend. So it qualifies to go on the list. So we're going to throw it on the list. Nvidia doesn't really need much of an introduction at all, as it was a top performing S&P 500, the top performing Mag 7 company in 2023, with the stock up over 200% in a 12-month period, which is just phenomenal. I mean, look at the chart here. It's just straight up in direction over the past 12 months, which during that period, they have experienced unreal gains of more than 215%. 215% in 12 months. That is crazy. The company now has a market cap of $1.7 trillion. And I already know what you're saying. Mark, so you're telling me this stock, which was up over 200%, it just surpassed $700 per share. It has a $1.7 trillion market cap. How much further could it go? Nvidia is now actually on the doorstep in terms of market cap of both Amazon as well as Alphabet. Let's take a look at some more details here when it comes to Nvidia. In 2023, the company generated revenues of nearly $27 billion, matching what they did in 2022. So revenue growth really wasn't there in 2023. However, that was their fiscal year end ending January 2023. Their next full year, which just ended January 2024, revenues are set to explode by more than 100%, nearly reaching $59 billion. This effectively proved that the demand was real. If there's one concern that I have about Nvidia moving forward that I want to bring up right now, it centers around margins. Sure, the demand is there and they'll be able to generate revenues, but are they going to be able to get the same profits that they once did? In terms of the dividend, that big juicy yield is less than 0.1%. Not sure why they even bother paying a dividend, but they do. I do believe there's still a lot of runway for the company moving forward. The demand is there. That is evident. But with the stock rise just in 2024 alone, with the stock up over 40% to start the year, It's only been roughly a month and they're already up over 40%. I would like to see the stock cool a little bit before I look to add to my position. Analysts are calling for EPS of $20.46 this year, which equates to 67% EPS growth, and that equates to a forward PE multiple of 34 times. At that multiple and that EPS growth, that gives Nvidia a PEG ratio of just 0.5, which is extremely intriguing from a valuation perspective. Other metrics don't look as intriguing, and the cash flow story will be one to watch here in 2024. So overall, Nvidia is a big winner, and I'm a big believer in the company moving forward. But the run-up that the company has had just in this year alone, up 40% in 2024 so far, it's only been roughly 1 month. I want to see that stock come back down to around the 575 level before I look to add to my position. And that leads us to AI dividend stock number 2, which is International Business Machines, otherwise known as IBM. We started off with kind of your new age AI play, and now we're going to more of the old school AI play with IBM. IBM is your granddad's dad's favorite company. In fact, AI isn't all that new to IBM, as they've had their Watson AI software for a number of years now. When looking at the chart here, it actually looks kind of similar to Nvidia, which we just looked at. However, looks can be deceiving. The stock is up a healthy 35% over the past 12 months, but that is obviously nowhere near the type of returns that Nvidia has seen. IBM currently has a market cap of $168 billion. IBM is, believe it or not, once again focused on growth, and AI is at the center of that, as they have a number of AI services that companies are coming to IBM for. Revenues have been climbing slowly but steadily over the past few years, up to $61.9 billion in the year 2023, with mid-single-digit growth expected in 2024, which I find to be cautious guidance. The margin story is huge as well and a big driver for earnings. As you can see, gross margins increased 9.2% over the prior year, with EBITDA jumping 16% year over year. And when it comes to the dividend, IBM is an actual dividend stock, unlike Nvidia really, as IBM yields a dividend of 3.6%, the highest on our list today, and they are also on the Dividend Aristocrats list for having increased their dividend for more than 25 consecutive years and counting. In fact, they've done it for 28 years. In terms of valuation, analysts are looking for the company to generate EPS of $10.05 per share this year, which equates to a forward PE multiple of 18.3 times. In addition to looking at a forward PE multiple, I also ran a reverse discounted cash flow analysis. And at today's price that we're talking about it right now, that is implying that IBM for the next decade, each year, is going to generate free cash flow growth of only 3%. Anything above that, and today's price actually looks pretty cheap. And before we move on to the next dividend stock, let me tell you about the Investor's Edge, my weekly newsletter, where you can sign up to become a premium subscriber. You can see my entire portfolio, get monthly portfolio updates. Each week we put out a detailed stock deep dive, a top 10 watch list, as well as our Edge report to keep you well informed on the happenings in the market. Check out the link down in the description below. And that leads us to AI dividend stock number 3, which is Equinix, stock ticker EQIX. As I mentioned at the start, there's a real estate play when it comes to AI. Yes, you heard that right, as Equinix is a data center REIT. When it comes to all of these AI platforms and all of this software, they need chips. And a lot of these chips are in computers, and these computers usually need data centers. Equinix happens to be the largest data center REIT on the market, with a market cap of $79 billion. And over the past 12 months, the stock is up 17%. By REIT standards, that is a solid return, not even including the dividend. So when it comes to AI, a lot of these big companies have the funds to create this AI environment, and then they also have additional funds to go out and build the infrastructure, the data center properties that go into it. But the fact of the matter is, all of these other companies aren't mega cap companies like Microsoft and Alphabet and have all of those funds available. They're already pouring billions into their AI projects. Do they have additional money to go out and now build the infrastructure, the real estate component? No, they lease from a company like Equinix. EQIX offers a 2% dividend yield with a near 10% dividend growth rate over the past 5 years, and one that has been growing for 9 consecutive years and counting. Over the years, even through a global pandemic, Equinix has been able to generate consistent, reliable, and growing AFFO, Remember, when it comes to REITs, we don't focus on EPS. Instead, we focus on FFO or AFFO. In terms of valuation, analysts are looking for the company to generate AFFO of $34.46 per share this year, equating to an AFFO multiple of 24.5 times, which is below the company's historical 5-year average of 27 times. Overall, all of these companies are rock solid, and they all have a connection one way or another to artificial intelligence. Now, when it comes to the word explode, that's going to be relative to each company. You're not going to see a REIT exploding by 200%, but a REIT increasing by 20% or more and then tacking on the dividend as well, that's explosion when it comes to the REIT world there. A much slower growing. But Nvidia, on the other hand, will we see another 200% year? Not likely, but the route they're on after 1 month up 40%, they could surpass that. Not something I believe is going to be likely. So I'm waiting for Nvidia to pull back, and IBM and Equinix look like relatively solid buys at these levels right now. Down in the comments section below, let me know, what do you think of these 3 AI dividend stocks here on today's list? And again, if you enjoyed it, make sure you hit that like button down below, as I truly appreciate it, and we'll see you in the next video. Take care.